Good morning and happy Tuesday. Michael Shotnick with Colorado Mortgage here. A couple big things going on in the mortgage slash housing industry these days. And normally this time of year is really slow with the holiday right around the corner. But the tax bill is the big elephant in the room that's having a pretty big impact on the mortgage industry and the stock market. And what I mean by that is the tax bill has proposed a handful of pretty big changes to the tax code and also corporate earnings or tax deductions for corporations, which the stock market is hopeful about. So the deductions are in relation, and the primary deductions are in relation to the interest write-off. One of the main advantages to owning a home is you can write off the amount of interest you pay on an annual basis. What this tax code is proposing is a very large standard deduction for everyone, so single, married, which in a lot of cases for lower to middle income, lower to middle kind of housing price, may be more beneficial to just take the standard deduction and not the itemized deduction, which would give the benefit of the mortgage interest. So there's going to be a point at which the itemized deductions will outweigh the standard, but it appears that will be in kind of the middle to upper range of income, middle to upper range of home prices, which is really going to limit the kind of national advantage for the average homeowner of owning a home. That's not to say that the standard deduction won't be as beneficial. It just takes the emphasis off owning a home from a tax perspective, which in the housing industry isn't a great thing, and that there will be implications, so potential for depreciation in value because the demand for housing may be less, and less affordability for homeowners, because in the past you could justify that the tax write-off would be increased if you upgraded your home, but now if the tax deduction is just standard, whether you own a $250,000 or $350,000 home, the tax piece won't change. So the benefit that kind of scales up won't necessarily do that now. And some of it's still a tad unclear, but it looks like this piece is hanging on, which will have impacts. In addition, the proposed tax plan will be most likely voted on by the House and Senate this week, and the stock market's very hopeful that the new tax bill will be passed rather, which is good for stocks, bad for mortgage bonds. Money's coming out of mortgage bonds over to stocks because the idea is that companies will become more profitable with less taxes, so it's hurting mortgage rates. So we're still in a good spot. We've been worse in rates versus where we are currently, but we're at that point where I think mortgage bonds are a bit fragile, rates are a bit fragile, and could go up higher if the plan passes, and it looks like it will. So not a lot of great news from a housing perspective heading into the holiday, but it is what it is. We'll kind of deal with it and move on. Michael Shotnick, Colorado Mortgage. If I can help you with anything, please let me know.